We are live. This is the market update. I am your host, Bill Noble. Is Bitcoin a bubble? Did it just burst? Did we all buy the top? Is the bond market going to drive the orange man out of town before he even gets in? Is the sky falling? Okay, well, we will answer all of these questions. Especially the whole is Bitcoin a bubble thing. Because I'm sure, at the top, it's going up forever. And then, they sell Michael Saylor some Bitcoin and then they drop it as usual. This time they have a little bit of legacy fanfare and some very distressing events out in California. If you're out there, my heart goes out to you. That is awful. Especially since, as usual, government mistakes are involved. Now, since government mistakes are involved, it's going to allow me to continue on the Bitcoin train. But if you like scary movies, I'll paint you the scary picture. I'll write you a pamphlet. All right. I'm going to tell you what the hedge funds are trying to sell you on. And I'm going to tell you why I'm not interested in that right now. I'm not. It's scary. We'll talk about it. Okay. So we got Alexandra here going to bed in Europe at 3 a.m. Bless you for staying up. Colby, Shaw, Thomas, Arendam, Miklo, what's up? Felix, Crypnotic, Ian, SGSG, Banks 911, Huber's Ranch, Tyson, Warmon, Miklo, 15-degree weather. Right. We're freezing. Everyone's freezing. Leonidas, Felix, Gian, Kirkville, Marcos. I am live. CB, Cat Entertainment. CB, macro is scaring me, sir. Sir, if you want to get scared by macro, I will help you right now. I will scare you until you want to hit the sell button. You're like, oh my God, get me out. And I believe that is exactly the point. They want you upset, 1, distracted, 2, and I think this is a very, very real attempt to literally take out the Orange Man's administration before he even walks in the door. In a way, I'm a little embarrassed that I didn't see it. I wanted to be positive, and I still think the way to solve these problems is through Bitcoin and gold. But we'll go over the current narrative. We'll go over it, and we can all have, because we're gonna have 3 really scary days, right? We're gonna have Los Angeles with 0% containment, okay, with the mayor on an overseas trip, and we have the bond market, and we have the bond market conveniently, strangely collapsing in the United States, the United Kingdom, and Japan, sending interest rates massively higher. And we have a bond market in China that is doing exactly the opposite. It's taking interest rates to 0, literally 1%. So interest rates are spiraling out of control in areas where, especially US and UK, where you have populist forces either rising or risen to power. Interesting. Along with a massive event in California. Massive. Okay, so look at this. I'm getting a tweet now. It goes right along with what I'm saying. All right. Now, before I go into the details, because there are a lot of details and there is some scary stuff, let me just tell you what my attitude is. There is absolutely no way that I'm going to let them shake me out of my view. Talk has already started on crypto Twitter about a head and shoulders top. We'll go into that. In Bitcoin, guys are already, guys are trying to get out there early with like 67K. Hedge funds are, like sharks, and they're out there. And I'm just telling you right now, I am absolutely not going to give up on crypto, even if it gets ugly in legacy. Like, I guess if they take it down to 67K, I'll just have to figure out how to buy more. But having them scare me, and they're not done yet because you've got economic numbers coming out, and they've been fake for a year and a half. Are they gonna make them so that the bond market goes hysterical? Is this the game we're playing? Like, how did all of California just all of a sudden get on fire and the fire hydrants not work? You know what I'm saying? Like, this is all happening at the same time. It's fascinating. And not. But we could have 3 more days of this. And I'm going to tell you how I think it's going to play out. Straight up. All right. But so we're going to go into news, and we're going to take care of everybody. So if you're freaked out, you'll get more freaked out. But I'm just telling you right now, when I'm doing this, I'm not changing my mind, and I'm going to tell you how I think it's going to get resolved. Okay. So let's begin with some talk from the 80s. Once upon a time, there was a guy named Ed Yardeni. Okay. Ed must be like 95 years old. We all read his work, and we still do. It's like the original stock market guru, right? Told everybody to buy in 2009 with both hands. He's like, you got to have a little faith, or you got to believe. Classic. He invented a term in 1983 called the bond vigilantes. I was a bond vigilante. I started in bonds in the 90s. Now, what a bond vigilante is, it refers to the fact that if the bond market doesn't like government policy, whether it's monetary or fiscal policy, the bond market can express its view in a very powerful way by making long-term interest rates go up. And how does that happen? Well, bonds just dump like an altcoin. They go, okay, you guys want to do this and that. You know what? We're selling. And when, it's a teeter-totter, right? When bonds go down, interest rates go up. So, strangely, and not strangely, when the orange man, for whatever reason, I still don't get this, starts talking about buying Canada and Greenland, or buying Greenland and taking over Canada, like the bond market and the vigilantes who have been dying to get loose, they got loose, and they wrecked long-term interest rates because, I don't know. I don't think buying Greenland is in the budget. I'm just saying. Okay. So the bond market just absolutely freaks out. Then an inflation number comes out on top of that. So the orange man gets way off script, right? Way off script. And then an inflation number comes out in a purchasing manager survey. It was horrible. And the bond market goes crazy. And interest rates go up massively. So the Fed has cut interest rates like 100 something basis points. And loans for cars and loans for houses are materially higher than when they started cutting. Now, naturally, Janet Yellen thinks this is hysterical. She's like, well, hopefully this doesn't get left up to the bond vigilantes, right? Wait a minute, hold on. I would hate it to come down to the bond vigilantes. Yellen hopes the new administration will take the deficit seriously. Janet, you made the deficit. Yellen, it's hard to see how Doge math works on spending cuts. Huh. Wow. Gee, let me ask you something about this. So follow me here. So it's kind of set up for, the bond market to have a problem. Now, Why hasn't the bond market had a problem for the last 4 years? We didn't get $37 trillion in debt yesterday. Isn't it interesting how we're having a problem now? And they're blaming it on Orange Man, possible tariff things, which, okay, that's not great for inflation necessarily, but none of that's happened yet. It's interesting how we're all doing it now. Now, one of the tools that Janet has at her disposal is something called Treasury QE, meaning if the government needs to borrow $2 trillion, they issue $3 trillion worth of bonds, and they keep the extra money to cushion the Treasury market, to keep the market for our debt from falling out of bed and interest rates rising. Gee, it seems they've stopped doing that 10 days before power changes hands. Gee, that's interesting, don't you think? And then Janet is on the tape going, well, I hope you guys are going to be responsible and take the deficit seriously. Janet, you blew up the country. And while you were at the Fed, you printed $85 billion a month for no reason. And now it's like, well, I hope the bond market doesn't go crazy. I mean, I think she kind of just told you. She's kind of laughing at you, right? Like, they engineered this. They're engineering an interest rate crisis so that, the Orange Man walks in an office and, mortgages are a mess, car loans are a mess. It's a mess. But they're doing it on purpose. Like, Yellen, hard to see how Doge can make any difference. Wow, really? You're an economist, and cutting government spending and ending what they call crowding out, where the government is sucking up all the money in the system. Did you not go to school? I thought you had a PhD. So all this stuff about the bond market wrecking everything, which it can do, feels orchestrated to me. Now, okay, again, Jim Bianco, U.S. Treasury, I hope the new administration will take the deficit seriously. Yeah, she didn't. And here is the 30-year bond yield in England. Now, England, as I like to call it, it's got its challenges for sure. They somehow elected a government that, I don't know. I don't know if that's by the people, for the people over there at all. It's scary. So, the bond market is, decided to express that they don't really like what's happening conveniently. It's like everything is just sort of like spiraling all at once. Interesting, don't you think? 10 days before power changes hands. Okay. No, if I looked at that graph, I would tell you, which I have told you before in the past on the show, is that speculative assets cannot survive interest rates at that level. It cannot. Like if you have long-term interest rates exploding and the dollar strong, that's it, right? Altcoins, Bitcoin, everybody talking about, $13 million Bitcoin, and then interest rates go, oh, I don't think so. However, I find the timing suspicious. Look at this. COVID stimulus may have contributed a little bit to inflation. But she printed the money. They handed it out. It's unbelievable. Really, it is. Now, meanwhile, back at the ranch that you and I live on, as the bond vigilantes want to take interest rates to the moon because inflation is too high and whatever, people have stopped using their credit cards. Credit card debt collapsed. They had one final hoorah right here, right before Christmas, and then boom. Kind of like COVID era. Like the consumer, in my mind, broke. Yet, we're expected to believe this huge narrative that, oh my God, inflation is out of control. Everything is out of control. I think what's out of control, right, is the currency. The value of the currency is out of control. Meaning, The dollar doesn't buy what it used to. That is the crisis, not the treasury market, not the bond vigilantes, all this 80s stuff, which I could tell you about night and day. Yeah, it doesn't work anymore. Like, it's very fashionable. And I discussed it last night. And they may have 4 more days of this because they got economic numbers coming out. And, I don't believe any of these numbers anyway. I think you could have like, one last hysteric in the bond market. Maybe. But that could be a massive opportunity in crypto, or it could be a massive opportunity in crypto now, because this is the data that I believe. I mean, I believe that what's going on in the bond market's gotten fed up. Okay, fair enough. But 10 days before power changes hands and with Yellen laughing in our face, you know what? That's contrived. That's a distraction, right? Remember what I said? Don't get distracted, get ready. I'm very much in that camp. So while they are trying to scare you with higher interest rates, we'll go over the charts. They are trying to scare you with the higher dollar. We'll go over that chart. This is what I think you should be looking at. Okay, now I got this from somebody who I respect. So this is TLDR in a very major way. The article is too long to go through, but I am going to read this part. Okay. Because this person writes this huge article that happens to agree with what I'm thinking based on charts and common sense. So I'll read this part. The deficit problem is unlikely to be resolved this decade, nor is it likely to culminate in a sudden collapse, because that's what the bond market is selling you right now. Instead, it will run structurally hot, punctuated by occasional moments of drama, while nominal figures steadily rise amid ongoing currency debasement, meaning 4% inflation or whatever, or the erosion of the currency is the problem. We need a currency solution, she writes. In this environment, holding hard, scarce assets such as real estate, equities, gold, and Bitcoin offer pragmatic way to preserve purchasing power and navigate the pressures of the economics of the article that she calls fiscal dominance, meaning however much money the government spends is pretty much the driver of everything. These scarce assets provide a hedge against the gradual yet persistent erosion of purchasing power in an era where fiscal policy rules the economic landscape. Okay? So there are 2 takeaways here. One, Doge can make a difference. Doge can make a difference. In other words, I hate to say this because I'm kind of mad at him, but you know what? Elon Musk and Vivek do have a shot at saving the day. Because if they come out blazing with Doge on day one, or if they can get on the tape and start talking about it, right, instead of whatever Elon's been talking about, that could turn things around dramatically. So the net is this. The bond market is trying to scare you with 80s level thinking. It's trying to create a crisis. It's trying to freak out the mortgage market. It's trying to freak everybody out. And they've done a really good job of scaring everyone, including me. And then I go, okay, but I keep telling everybody that the solution to the problem with debt has to be done in the currency market. And there's really not that many currencies you have to choose from other than gold and Bitcoin. Maybe you could throw copper in there because they need that for electricity. Maybe. But gold and Bitcoin are the best. And wouldn't you happen to know that 10 days before the orange man takes office, we're all hysterical and thinking everything else but what this person is saying, right? Let's see if I can get to her Twitter. No, doesn't let me get to the tweet. Let me take it to the top so at least this person can take a bow. Full steam ahead, all aboard fiscal dominance. Doesn't give me the Lynn Alden. There it is. Well done, right? Huge article. I kind of like this, right? We just need a Bitcoin on the front. Okay. So I guess everybody who thinks that you're going to derail Bitcoin, derail crypto, derail the United States of America with, the 80s. No. Remember how I told you that I was going to go about in this market like I was 18 years old? That's what I'm doing. An 18-year-old doesn't know what a bond vigilante is. I could tell you all about it. And you know what? At the end of the day, it doesn't matter. It doesn't. Because whatever they're doing, excuse me, is just, I don't know. I don't want to mess up the channel. It's BS. It's just wrong. So that's my view. We will go over the charts. Okay, so federal publicly held debt under the current policies. Okay, so publicly held debt, right, as a proportion of gross domestic product. So we're on a trajectory towards, massive debt relative to what we build or what we create. You're right. So we have to create a lot, starting with Ripple Inc. having 10,000 employees and a massive crypto industry and a massive AI agent industry. Right now, more than ever. Bond market upset about the debt? No problem. Let's grow. Let's grow. Right? Let's cut spending and grow. It's like Ronald Reagan showed you how to do it. So let's do it. Let's absolutely do it. Okay. Here we go. The Eagle King. In the recent fiscal dominance report, Sam crunched the numbers based on government maturity profile for how different interest rate scenarios would interest rate. Okay, so that's a lot of economic stuff, but you get the point. I'm not buying what they're selling. Now, on the flip side, we got a little bit carried away. We got carried away. I got carried away. I can admit that. All right. So 2023, Bitcoin crashes to 16K. 2025, Bitcoin crashes to 95K. Soon, Bitcoin crashes to 340K. Okay. So I like the thinking, but we got a little bit too ahead of ourselves and, we got liquidated. We're talking about a $500,000 Bitcoin and, it smells a little bit like a bubble. We'll go over that in PowerPoint. We'll make both arguments, but we got too frothy. We got too excited. I got too excited and we got liquidated because I underestimated who wants to ruin the Orange Man's administration before he even gets there. Okay. Bernstein, a major crypto, an investment bank, an old one, wrote a report that says we're entering crypto's infinity age. I wish I thought of that term. And they think 200K Bitcoin driven by the ETF with 70 billion of inflows. Okay. AI plus crypto, decentralized AI blockchain, proof of human, and tokenized AI agents. Orange Man in ordinals. This would be the headline if we weren't talking about Canada and Greenland. Just saying. And I was on the air when this came out. Okay. So, I'm not sure what we're doing here. I talked about this last night. This is what set the bond market off. I think we should stop talking about this, right? Because, if they don't like what a country is doing, they can sell the 30-year bond and just be like, oh my God, these people are crazy. So we should stop doing that. Stop doing that. Okay, now distractions. Oh, no. This is funny. So we have the Orange Man doing ordinals. We have the Ethereum Foundation selling indiscriminately. Now, how do we process this? Like what is the angle I'm going to take? So they won't use any of their own protocols and they continue to just relentlessly sell. This time they sold the top, now they're selling any rally. Here's how I'm going to spin this. I think Vitalik is bearish his own coin. They obviously are, because they're not borrowing against it. They're just flat out selling. So, what normally happens when an organization or corporation gets bearish their own coin? Well, it just so happens we have a perfect example in XRP, right? In XRP, they donated to the other political party out of raw fear, and they were probably selling XRP to fund their company for a while. They were the big sellers when it went to $1 after the SEC, in my opinion, right? And even if that's not true, there was no enthusiasm despite the SEC victory from them. There was more enthusiasm about their stable coin, which, that's going to get huge because it's made in America. But when Ripple was bearish XRP, Ripple didn't talk about XRP when he appeared at a conference in April. Not a word. So I argue when someone gets bearish their own project, it's actually bullish. With XRP as the example, right? Ethereum price could peak at 12,000, right? Says a head of research department. I like the thinking, right? In other words, we'll take whatever Vitalik is selling. We'll bet that there's nothing wrong with Ethereum and that somebody's going to want to come and do Web3. I understand why they want to do this stuff with Greenland and Canada, but you're going to do a lot more for Americans with crypto. Just saying. Now, speaking of other distractions, so this thing in California is awful, right? And I feel really bad for people. I took a vacation in Malibu and Pasadena, and as I understand it, these areas are just like gone, right? Now, some bad government policy, fire hydrants don't work. Interesting that all this happens at the same time, right? I knew about high winds, but you had a weather event, a giant fire, and a bond market crash all happening 10 days before the Orange Man takes office. And conveniently, all the big insurance companies stopped insuring people's homes in this area 6 months to a year ago. Interesting, don't you think? Now, insurance companies have AI, but in some ways, this event was predictable. They predicted it, or they knew about it. Either way, okay, it's a distraction. It's horrible. It's like you're like, oh my God. And, it's all happening at the same time, at a very interesting time, getting people divided, getting upset. The mayor is in Africa. The whole country's on fire, and the mayor is abroad? Really? Okay, so the Orange Man is all over the governor of California over this. Again, it sows division. We don't need division. We don't need the 80s. We don't need division. We need crypto. That's what we need. And you want to know who's got it right? I can't believe I'm going to say this, but for the moment, the communists are on the right path. The Chinese are like, yeah, you know what? We're going to get our act together, because if we're going to have to print, we're going to need to have hard assets on our books. The strategic Bitcoin reserve could start with China, because I don't know what's going on over there. Basically, they're in like a giant deflationary bust. You have bond market stuff going on here that it's just like, it's unbelievable, right? Their interest rates are going to zero because their economy is collapsing. And, you have major G7 bond markets crashing with rates spiraling higher. I'm tempted to say that, like, whatever's going on in China, like that deflationary credit bust thing, I'm tempted to take that more seriously than this charade in our bond market, personally. Right. This like, oh, well, we're going to solve the debt crisis by having 10% interest rates and having housing go to zero. And yeah, okay. That was, that's old thinking. It's not going to work. When an old guy is trying to get you off old thinking, perhaps I've lost my touch, or perhaps I'm trying to act like I'm 18. And sometimes acting like you're 18 can be very, very bullish, especially if you're pointing yourself in the direction of something new. Now, this makes me want to run for the hills. Like billionaire Mark Cuban was like, oh, I like Bitcoin better than gold. And I'm like, cringe, right? This is like talking about Bitcoin crashing to 340,000. Yuck. Okay. But I do like the fact that the state of Oklahoma, which is next to the great state of Texas, our huge rival, is talking about paying vendors and getting Bitcoin moving through their ecosystem. And of course, BlackRock will buy all of the Bitcoin that you have to sell. They will just buy all of it. That's what this macro charade with the bond market to scare everybody. I don't know, man. They just, they fill Michael Saylor's orders and then they run the scare trade. And here's the orange man predicting what was going to go on in California. I mean, it was going to happen, and it happened 10 days before power changes hands. That's a fact. We just listed Ripple USD on Ethereum network. This changes everything. This makes Ripple the size of Tether eventually in terms of like market cap. There's the Ripple. I mean, can you imagine XRP and the Ripple stablecoin in the top 5 or top 10? I can. Notice XRP did not go down today or yesterday in any material way. Okay. So whatever these characters are doing, I hope they're having a great time. I didn't think they were going to be able to hit altcoins again, but you know what? They're very inventive, right? They just whacked this whole thing 25%. Man, I looked at this and I'm like, wow, I guess I'm wrong. And they may hit it again. They may not be done. They may. We're going to go over the charts, and I'm going to show you what they're going to do. I'm going to show you what they're going to do. Okay. All right, we got to get over to PowerPoint because I'm not done scaring you. All right. So let's talk about what is a bubble. All right. So this comes from Howard Marks. A bubble is a psychological extreme. It's an overestimation of future potential. It's a belief that there's no price too high. It's participation by non-expert investors drawn in by hype. Okay, so for crypto, this is actually about stocks, but I don't know that crypto is overestimating future potential, maybe for Bitcoin, but not for the rest of the ecosystem. A belief that there's no price too high. Well, only Michael Saylor believes that so far. And participation by non-expert investors drawn in by hype. I don't think the general public is in like they were in 2021. I don't see that mania yet. Okay. He says a lot of times these occur in technology and innovation bubbles. Bubbles often emerge around new transformative technologies. Okay. And while new investors can, new inventions like the internet can change the world, investors tend to overprice their potential. Now he's saying current market valuations are high, but not at an extreme bubble. There is actually less irrational exuberance now compared to past bubbles. Again, he's talking about stocks, but I think it's very relevant to crypto. Investors acknowledge risks and valuations more soberly than in prior periods. So in other words, if things are lofty and overpriced in stocks, people are like, yeah, it's lofty and overpriced. Whereas back in 2000, they literally rewrote the finance textbook. I know because I had one. I went to school in 2001. That was so powerful, they had to rewrite the books. I don't think they've rewritten the books. And all of Web3 is decimated yesterday. It's like a lot of it never got off the ground. Now, Marx reiterates key investment lessons. It's not what you buy, it's what you pay that counts. Even great companies and great cryptos can become overpriced, and understanding and avoiding manias is crucial to long-term investing success. Okay? Mark stops short of declaring the current market a bubble, but advises vigilance, emphasizing historical patterns, etc. Now, if Mr. Marks wants a bubble, I'll give you a bubble. It's the US dollar. It's the dollar index. What the hell is this? Right? This is the bubble. This is the bubble. Now, I understand there's a lot of demand for dollars. China's a mess, but the only way out of a debt crisis is to change the value of the currency. That's it. So if we're going to continue to have debt and we're going to continue to have a government that runs hot in terms of the amount of money that it spends, you got to somehow change the value of the currency. And if you can't do it in the fiat market because the DXY only goes up, right? Because, the euro and the yen can't seem to rally. So dollar up, everything else down. This may be the bubble. Maybe. Now, here's the bond market. So if you want your scary charts, here are your scary and not scary. So, the 30-year bond yield, which, that's the interest rate that comes from the 30-year bond. The best way to think about it is this is where mortgage rates come from. So if you can't figure out what a bond yield is, don't worry about it. Think of it as like, this is where mortgage rates come from. So mortgage rates going up, 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 up. Above where it was when the Fed started cutting rates. Way above. Okay. Back to the highs, above the highs from last year. Close to 5%. Naturally, hedge funds, if they're really going to scare you, they really want to scare you. Okay. With these economic numbers coming out, they'll have this print 5%. It's like 4.91. It's like 4.94 this morning. So, if they want to make everyone upset, they'll go print 5. And if it goes through 5, well, then you have a problem. But you got Lux Algo trend lines. You got Lux Algo trend lines, the Lux Algo premium zone, and 3 Lux Algo sell signals or, signals that interest rates are too high. So you know what? You guys can have fun with this for 4 days. I'm not buying into this. This is not the solution. This is what the orange man gets for talking about Greenland and Canada. They won't do it again. And that's the good news, right? Like they do have to keep one eye on this bond market now. That part of the bond vigilante thing is true. Like they can't go off and be stupid and be like, yeah, let's buy Greenland. They can't do that anymore. They're investment bankers. They're real estate guys. I get it, but they're not doing that anymore. They're not. That's what their Soros economic policy advisor is telling them right now as we speak, as they pull Elon and Vivek out of the naughty corner, right, to tell them to shut up and get to work on government spending. That's what I would do. I mean, it's not like they haven't pre-announced it. They have to go at it harder now. So, I mean, you can go with the hedge funds and say it's going to go to 5% or above 5%, or you can bet on Bitcoin and Doge. That's the choice. And that's where we are. They're going to scare you with that. And they scared you with this. This is the 10-year note yield. So this is the 10-year interest rate. And, they got a lot of room here. This is like 4.7. So this was the high back in April. Fed cuts rates and bonds sell off. You've never seen it before, right? Like long-term interest rates are not dependent on the Fed. They can set their own level based on what they think of the world or based on whether or not Janet Yellen stops supporting those bonds like they have for the last 4 years. In any case, Lux Algo premium zone with multiple signals here. I'm not doing this. I'm not going to fall for this. I'm calling bullshit on all that. Not doing it. Meanwhile, back at the gold ranch, here's gold sitting very quietly inside of a triangle. Yeah, interesting. Right now, what's gold going to do? Our interest rate's going to go up so high that they're going to 10%. Oh my God. I don't think so. People are walking away from their credit cards. I think all of the job numbers have been a joke. And if there's going to be persistent inflation with a Fed that can't hike rates, there's nothing better than gold in that scenario, really. I mean, Bitcoin is great, if you have a little bit of action in tech stocks, but if you have inflation and a Fed that is helpless, gold is the trade. Because that lady that wrote that article, she was essentially saying what the Fed does doesn't really matter when the government is spending the kind of money that they're currently spending, or they have the debt problem that they currently have. So if what the Fed does or doesn't do doesn't matter, then why can't gold go up massively and Bitcoin go with it? Like, why is it one or the other? It shouldn't be. Okay, so this is DeMark work in the long bond ETF, which I would encourage you to follow, TLT. So the bad news is that you could have 4 more days of whatever we're doing now. You could have 4 more days of it. You could have big wicks down. You could have people freaking out about numbers. I looked at this. I'm like, okay, yeah. Here come the big scares off the numbers. Oh my God, jobs. Oh my God, oh my God, whatever they can feed you. Oh my God. Like if every single thing they feed you is, oh my God, hysterics, it's fake. That doesn't mean algos in the bond market won't react. Whatever. Okay, so let's go to Bitcoin, and let's talk about what crypto Twitter is going to scare you with. Okay. Also seeing news statements now that Uncle Sugar is going to start selling U.S. government Bitcoin. So Eagle King is sending me a headline here. Okay. Department of Justice cleared to sell $6.5 billion worth of Bitcoin from seized Silk Road assets. Right. Incredible. Uncle Sugar's portfolio on Arkham. Okay. If that's what it's going to be, then that's what it's going to be. Let's go to live TA. Okay. Let's go to live TA and let me show you how I think this is going to play out. Because from great pain comes great opportunity. All right. Now, what we have here is we have what looks like a Head and Shoulders top. It's not perfect, but it's clearly there. And as it pains me to say it, like this momentum signal here that I was absolutely in love with. I'm in love with it. Okay. Frequently when you have a right shoulder, you get very emotional and then it abruptly stops. So, like professional technical analysts, they're going to draw this. They're going to draw it and, they're going to scare people with it. And it's pretty scary, right? Everyone's like, oh, it's distribution. The top is in Bitcoin. It's a bubble. That's why we went over the whole bubble thing, right? Because they're going to start that nonsense too. I don't think it's a bubble, right? Bitcoin is up, but everything else isn't. And Vitalik is selling ETH. How could it be a bubble if Vitalik was selling ETH? It's not true, right? Not at all. Okay, so here's what they're going to do. The numbers are going to come out, right? And they're going to do this. And crypto Twitter is going to go, oh, it hit the neckline and then this. Or maybe even that. I don't know. And whatever it is, it'll be ugly. It'll be unpleasant and everyone will freak out. And then it's going to go like this. That's what I think is going to happen. They're either going to scare everybody by just leaving it just short, which is possible, or they're going to try to do a probe below 92, right? And run the stops and get everybody out and get everybody talking about, because this will be the target of the pattern, right? Because, I'm doing it this way because I learned from a really smart guy who really gave me my first job where I could get out of the futures exchange and all the jumping up and down and yelling and screaming. Okay, so the target of this pattern, which you will undoubtedly be hearing about tomorrow, is like 75K. Okay. So either we're going to have an interest rate problem and Bitcoin's going to 75K, or everybody in the whole world knows where this line is. And if they get the opportunity, they're going to try to break it, or they're going to try to get everyone hysterical, because everybody is already believing this bond market narrative to begin with. In other words, the majority of the people, like, everybody on crypto Twitter is going to be like, oh my God, it's the bond vigilantes. No. This is what people should be talking about. How to preserve your purchasing power, right? When the debt train may not stop and it may not be apocalyptic, which is a perfect environment for gold. Why do you think they're threatening you with selling this stuff? Like whatever, like they're trying to scare you out of your Bitcoin. They're trying to distract you. Oh my God, it's a science fiction novel in California. Like there's one operative chart here, and I think it's this. I think this is how it plays out. We'll see. Okay, let's go to live TA. Hopefully that's helpful. Okay. Getting logged in now. All right, there we go. Okay, so Bitcoin on a daily chart. This doesn't really tell you anything from a DeMark point of view. Oh, God, 2 nights ago. Remember we saw the 13 top? I talked about Michael Saylor's orders getting filled and then them dropping it. God, I really didn't think they were going to drop it like this, but that's what they did. Okay, make sure we pay attention to the 13s more in the future. Now, what I am noticing is that when they drop it down to 93 to this DeMark point, right? So they washed out the whole January rally, and then BlackRock and everybody, just all the market makers, just start hoovering it up. And I don't know, they may take another shot. I don't know. But to me, this looks like they're trying to hammer out some kind of bottom. The same thing in Solana. They wiped out the whole January rally. And now they may just leave it down here and pressure you under 200. And one day you will say, I could have bought Solana under 200. I could have. Now, there's no such DeMark support in Ethereum. I really thought Ethereum was going to break out here. Famous last words. So unbelievable that Vitalik did sell it into support, right? Or they sold it up here, but ETH is still holding. It's still holding. I mean, now I did see somebody say something negative and scary about Sui, which I thought was interesting, right? So, Sui makes this big emotional high, takes out this level, really thought it had more legs. But one thing you're going to notice about Sui is that, it goes down and then it looks like it's going to resume, and then it turns around and goes back up. This is about as bullish as it gets, because Sui should have fallen apart and it didn't. There was support at 430 and they couldn't control themselves. They had to get it now. So I don't think this is dead at all. At all. I think this is just a classic blowout. Now, are your coins wrecked? Probably. Do you feel wrecked? Probably. But in bull markets, you have to earn your money. So here's Arrow, right? There's the 9 bottom and the 13 bottom all rolled up into one after they ran the stops below $1.30. These are the 4-hour charts, by the way. And there's massive support on the daily chart at the same level. Like tomorrow, you'll have a 13 bottom in Arrow, most likely. I don't know, man. There's no way I'm selling stuff down here. There's no way. I'm not. I would rather just get carried out and be the clown that bought the top than like turn around because they scared you. I'm like, wait a minute. The fact that they turned around and tried to scare us, if they can't break it, if they can't trigger that head and shoulders top with everybody looking at it and everybody scared, it's going to go straight up. Like, I just find it really interesting that like there's all this bearishness about the bond market and all this negative stuff out there. Yet MicroStrategy, I mean, I know it's kind of sort of far away, but like you take out this gap, like you take MicroStrategy down to like sub 300, like 290, you're going to run right into this big gap. And I still think that there's a lot of people short this stock. I still think that. I still think that these guys can get squeezed out of this thing, which would be dramatic, particularly if Bitcoin goes down and everyone's like, oh my God, the bond vigilantes. And then everybody figures out that the real data, the real data has to do with people's credit cards, right? Like the general public is telling you that they're done. They're just done. I don't think the hiring is out there at all. At all. The Orange Man is making all these promises about jobs, and they're talking about buying Greenland. Like they have to pivot harder. Like they have to pivot even harder. Like first it was Elon putting his foot in his mouth about the thing with the visas. And I'm like, well, they got to pivot to crypto now. Instead, they pivoted to Greenland. I'm like, okay. All right. Well, now you double got to pivot to crypto. I mean, are we done yet? Are we there yet? You guys all suited up in your orange tie and Michael Saylor are going to go to the inauguration? Well, you better hurry up because the bond market vigilantes they're out there. They're out there. I just don't think it's the solution. I don't think it's the wealth creating opportunity in the trading world today. Hedge funds will tell you differently. I think they can scare you, and if they don't break it, that's when it turns. That could take 4 or 5 days. All I know is if they try to break this before the inauguration and they can't, look out. That's how I'm approaching it, right? If the 30-year bond yield goes through 5%, okay, then you got me. But I don't want to just pack it in because they scared us. Okay. No, Cat Entertainment says I bought the Arrow dip. Darn it. No, man. I think Arrow, everybody was giving up on Arrow at $1.20 previously. Oh, Danielle wants me to do ski mask. Of course. How could we forget? How could we forget? Let's see what they got for us in ski mask. Another trip to run the stops. How nice. You know what I'm saying? Like, you think it's breaking out. Even I thought, I was like, okay, we're done. We're not going to do this anymore. Boom, they do it again. The more times they do it without breaking it, the higher it goes. That's just my attitude, right? Let's just see what they did to virtuals. Let's go over some AI stuff. Look at that. Wow. Nice. So virtuals went to the 38% retracement of the whole move. It doesn't get any better than that. It doesn't. It's $3.31. So the thing was at $5 billion market cap, and they were nice enough to mark it down to $3 billion. Okay, two AI coins that I'm looking at. I don't know what happened to them today. Lush. So this is a highly speculative play that somebody can compete with virtuals with human beings. At the 62%, a retest of the 62% retracement. Not investment advice. It's just something I'm looking at. Remember, the word is looking at. Sequoia. Okay, here we go. Sequoia. Yeah, this is a virtual agent. Wow, $76 million. Holy cow. People are after this because it's named after a venture capital group. They're really after it. Okay. So they're after something in the AI agent world. Okay. So DGen price was fucking brutal today. God. It's incredible how fast they give up on decentralized social media. They were into it for like a day, and then they just packed it in. Guess we're going to find out which one's right? The head and shoulders bottom in DGen or the head and shoulders top in Bitcoin. We will see. What about Pengu? AI Nova Shell. Okay. Lux Algo for Polkadot. Okay. God. Boy, that AI signal in Polkadot, man, that was like giga bullish. I don't know, man. The entry price feels like where they were this morning at like $6.50. I mean, this was the high before the give up trade in July. So, I mean, it's almost like with Polkadot, like this is the entry price or any dip to 6.5, in my opinion. I mean, don't run for the hills until they make you run for the hills. You know what I mean? Like, don't give up. Don't give up when it just started. Okay, Pudgy Penguins on Solana now at 2 billion. So this is the 30-minute chart. So Pengu's probably got to get itself above 0.036. That's the 62% retracement. Looks like they're going to have themselves a battle. The 62% retracement of the last rally. So for laughs, let's just see where Pudgy is. Okay. So if they drop the market again, the ultimate level would be 0.031. And you know, maybe they can carry me out, but I don't know, man. I find it really hard to stay away from stuff like this because, you know, if it was a bubble, like ask yourself this, like for anybody who remembers 2021, right? Or for anybody who remembers, well, of course you don't remember that. Let's put a bubble up, shall we? Let's do a bubble. I think it's worth the time to have to sit through me doing the chart. Let's put up a real bubble. Here we go. Okay, so here's what a bubble looks like. This is the internet stock bubble. This is called NASDAQ Composite. So today it's the Magnificent Seven. Back then it was all the tech stocks. So NASDAQ went from 1,500 in September of 1998. And stocks went from, the index went from 1,500 to 5,000. Straight up. Okay. Is this what's happening in crypto? I mean, it is what's happened in select products, but is the whole market doing this? I would argue no. I would argue no. Now, there's all these people who think this is going to happen. And again, I would argue no. No. Right? Because it's not overextended. We need it where it is because we got to change the currency. Period. So I'm gonna leave it there. Let me see if there's anything like massively. Okay, there's rumors of Pudgy joining Pokemon. Okay, Felix wants to look at Solana. We should probably do Solana. Now that I've explained to you that I think it's not a bubble, even though they're going to sit here and smack it as I'm saying that. Okay. It's kind of funny that Solana, this is a monthly chart I'm just looking at now. So Solana is still up for the month of January. Interesting. Sharing screen. Solana is still up for the month of January so far. All right. So let's look at a 4-hour chart of Solana. Okay. So Solana got to the bottom end, it got to the top of this like accumulation cone, and now it's at the bottom. The worst case scenario in Solana is 178. I have no idea why it would go down there, but maybe that's just what they're doing today. Right. And these economic numbers are going to scare people. So Solana's at 195. The downside is 178. Now, if you can't tolerate 178, your position is too big. And if you got cash on hand, you should pray that they give you 178, because any volatility that they get on these numbers, like I'm willing to say, and I know this could result in me, like losing face or losing viewers or, losing money myself. But if they want to do a fright night into the inauguration, this is what they did with the ETF, the Bitcoin ETF, right? They sold everything thinking that the whole ETF thing was sell the fact. And then BlackRock came in with both hands and it was gone. I think they're doing the exact same thing. So you give them 4 or 5 days to get this out of their system, and then we'll see. Right. But if it's going to go up, it is unfortunately going to be very scary first. I was leaning on the Orange Man, and the Orange Man talked about Greenland, and that was the big pickle for me. Right. I was like, dude, that's XRP, not Greenland. Okay. We'll see you tomorrow.